Stock tip. Best stock setups.
Hi, and welcome to a new episode of Stock Tip Daily Update with me, Untitled. Finally, we have some positive news for you guys. If you take a look at the SPY chart and especially at the Nasdaq chart right here, the SPY managed a nice 2.2% today, and the Nasdaq even better, plus 3.7%. Also the IVM plus 3.1%. But this is not that interesting for me. The most interesting today is the Nasdaq, which actually managed to break out of this trend I wanted to call it a trend canal, but out of this trend. If you take a look at the daily candle, we've managed to finish above the trend line with enough volume, so with above average volume. So this is very nice. This is a very nice news for us, but we do have to remain positively optimistic, so carefully optimistic. I don't think a whole bunch of optimism is right here. The markets might just continue falling because, as you know, in the past we did test the 200 moving average, and we did have some similar movements here in 2018, 2019, and by that I mean this one. So we had the fall, a bit of a further fall, then a sideways move, and then the fall continues. So there's nothing to say this won't happen again, but why not be a bit optimistic and say after 2.5 months this correction is going to end soon. I know if you have the fundamental reasons for this, but I think it would be very nice to see it happen. So I think the next days are going to show us in which direction the market is going. Just remain optimistic. More you can't do more. You can do anything more. I would still recommend sitting on the sidelines, but I've decided yesterday already that I would try to make some profits out of a possible recovery, and already yesterday I bought myself this option. I was talking about it in the last time, so in the latest slides, and by that I mean a call on the S&P 500, a call option that would expire on the 17th of June, and with a target of 4,600. So this is not to say we will already reach 4,600 or that we will reach 4,600. This was just to say that this option has the best risk-reward ratio, in my opinion, so the best one for me, and that's why I went with it. So this option costed me at that time 4,500 approximately, with a possible win of 35,000 or 40,000 if we went all the way up to 485 or so. It remains to be seen what will happen. 3 months is a lot of time, and why the hell not? Why the hell not? If you take a look at the past, you can clearly see that after consolidation, the SPY moved pretty astonishingly fast in the other direction, respectively up, and why not try to be on the right side of this move for once? That's what I'm trying. There's no guarantee that I'm going to succeed, but the odds are in my favor, so I think I'm aiming for 1 to 7, 1 to 8 risk-reward ratio, and that's more than enough, isn't it? So in one, I just have to be right in 1 out of 7 or 1 out of 8 cases, and then I'm still not losing money. anything more than that, like 2 in 7, 2 in 8, and I will still be making enough money to be able to explain this trade. Let's continue with the IVM. So the IVM is still moving sideways, hasn't made that much of a progress, and as you know, the IVM represents the majority of the stocks on the stock market. We are speaking about the biggest 2,000 names in the stock market. So IVM is still not the biggest, but we are speaking of 2,000 names on the stock market. So the IVM is still moving sideways, but at least we are nearing the same trend line. So let's just see if we get some positive momentum in the IVM as well. But most importantly, the Nasdaq, the tech sector, is looking good. And as you recall from yesterday, it were the blue chips here in the tech sector, like Apple, like Amazon, like Nvidia, that were bound to rally. Also Facebook, which had a discount of almost 50% at one point, and Twitter. So such a huge discount from here all the way here. So 50%. These are stocks that are bound to make a comeback. Take a look at Twitter. And I think this is why we've had this momentum these last few days. So Twitter, the same here. Since August, Twitter has lost no less than 57%. Since its all-time high in March 2021, has lost 60%. So why wouldn't you expect that some investors are going after Twitter again or after Facebook again? Not forget that Facebook bought Oculus, and VR is the latest in the supposedly high-end technology that's going to skyrocket and further and further. So Apple also looking very promisingly. Take a look at this since 2020. So 2020, Apple has not once breached this trend line, and we would have been ill-advised to expect that Apple was going to breach it this time around, and it hasn't. So it has bounced back up. It might just be a technical bounce that's going to last for 1 or 2 days, but it might also be something more with a bit more of momentum and going all the way to the top here at 169. So this is what's triggering the market. This is what's triggering the rally in the market. Also Amazon. So the same story here. We've touched the latest support line again, and we've made a nice bounce. Now tomorrow will be interesting because of the same reasons. Amazon here has already reached its trend line, and Apple has almost reached 20 moving average. So this is the point where normally the technical bounce should end. That's why I think tomorrow is a special day. Tomorrow we are going to decide the fate of this small rally in the market. Is this going to be the long-awaited rally, or is it not? I think it all comes down to the movements in the blue chips here, and we just have to wait and see, like always. But it's nice, it's safe to be carefully optimistic for a change. The DAX also managed almost 5% today, and it's going for the 50 moving average and possibly for the 30 mark here. This was a long disputed mark. Nobody thought that the DAX would go beneath 30, but it did. Perhaps we are going to be able to conquer it back. And the euro to US dollar is still moving sideways like we expected to. I'm curious if this move is done, but for the time being, this still looks like a trend down. Oil managed to didn't manage anything actually. The oil is still heading for the 50 moving average, and it's bound to touch it perhaps tomorrow, and possibly the move up is going to continue after that. Gold also with a sideways move, we have plus 6%, plus 0.6% today, but from a technical point of view, it hasn't changed pretty much at all, and I still think we are going to need a couple of more weeks before the gold is going to rally again and or continue the rally. The same in silver, like always. Silver is copying gold, and for the most of the sectors out there, nothing that convincing either. Let's see how the solar sector is doing. Solar sector bounced here out of this line, which we use as an entry point out of the 67 line, and is heading back to the 200 line. Perhaps this time around, with a bit more luck, it's going to continue its way up. So this is the state of the market. I think the strategy still would remain the same. Be careful, be careful, be careful. But because the market, this small bounce might be just that, a small bounce and not a rally, and it could end up going south again tomorrow. Not to forget that for a short time it looked like it today also. So we started the day with a gap here in the SPY. We went up, we went up, we went up, and then we suddenly began falling. And at one point we had a huge shooting star, and things weren't looking that good. So this could happen again tomorrow, and then you could say this is the end of this technical bounce we were so looking forward to. So I would prefer being careful. I would prefer sitting on our money for the time being, and I, for one, am going to continue this option strategy for the time being, and at least until we get a confirmation of the breakout in the Nasdaq or in the SPY. After that, perhaps I'm going to also join in on the action in Facebook or in Apple, but mainly the huge movements today, tomorrow, and the next few days, if they are going to come, they are going to be in the blue chips. I do have one small tip. Use it as a setup if you wish. This is my gift to you today, and this would be AMD. So AMD has reached a nice, interesting point. I think a month ago or 1.5 months ago, we were here, and I said we are just halfway through. So we were only about here, this equivalent here, and we are way further down the road now. So AMD might just be ready for the next sustained breakout. Might just be ready. If it comes, then AMD would be a long position to be held at least until 220, 240. So AMD was always very promising when firing up. AMD managed here 57% by the last rally, and the rally before that wasn't any weaker than that. So the rally before it was I can't touch it, was 53%. The rally before it was 65%. So I think 50% is not 50 or 60% is not that impossible. So we would speak of 180 or 200 or even more. That's not impossible. I'm certain this is not impossible to reach if AMD is going to start. So there you have it. This is my gift to you for today, and use it wisely. I hope it brings you a lot of luck. But this must definitely remain on your watch list. AMD, it looks by the looks of it, must be a stock that is permanently on your watch list, and you're ready to jump in on this action anytime AMD looks that promising. Okay, this is all so far. I do have, I think, 21 new setups, the best setups out there in the market right now, and I'm going to also give them to you. But this is just for the premium part of our video, for the subscribers of StockTip Premium. If you do want to take any part of it, just write me a private message, but usually you can find it on our website, stock-tip.com, under StockTip Premium. Good, that's all for today. Don't forget to like and subscribe, and if you do have any questions, any kind of questions, write them down in the comment section below. Now, with the new setups.